Good morning, good afternoon, good evening, whatever time of day it is. I'll start again. Whatever time of day it is, wherever you are. Welcome to today's Crypto Blast with myself and Cam O'Connor from Institutional Fi, where Cam will be giving the ultimate rapid fire update in crypto markets, latest pricing flows and market moving news, etc., etc. But before he does, let's get the legals out of the way. So as usual, nothing discussed in this space in session constitutes trading or investment advice or infers any kind of endorsement from PIQ, Institutional Fi, myself, Ryan Paisley, or indeed that of Cam O'Connor. Cam, how are you, my darling? So unmute yourself. No? Hello, Cam? Yeah, I can hear you, mate. I can hear you loud and clear.
Spaces gave me the mic, took it away just as you said my name. I was like, oh dear. Great start to the Spaces again.
Yeah, we need to find a new way to record these, I think. Spaces is getting increasingly troublesome. But anyway, moving on. What's happening in crypto?
Oh, so much is happening. Can't wait to get into this one. On a regulatory side, so much to unpack. And then on the price action side, which we're about to get into, there's some very, very exciting developments, including some ETH maxis are going to be running up the walls, singing and hopefully buying me beer later. So there we go. Right, let's get into it. Regulatory clarity coming into play over the last 48 hours. BTC has been able to break through several key areas of resistance and overhead liquidity, breaking past the $100,000 mark yesterday and topping out today at $104,500, bringing BTC within 7% of its all-time high as it currently stands at $103,200. And just a couple of key stats as they come in at the moment. Obviously, these things can change. If Bitcoin breaks 110,000 in the short term, there is currently $1 billion in shorts that will be liquidated on perp futures contracts alone. So a lot of liquidity sat on the short side and probably sweating just a little bit as BTC looks to make another daily high today. Looking across to Ethereum, over the last couple of weeks, we've been covering the Ethereum Layer 1 ecosystem with a close eye, seeing confusion over their short to long-term objectives. And amidst the uncertainty price action has highlighted in these weeks and months that investors were unsure of the chain's future's role. And this was particularly seen when comparing ETH against its peers in the space. So whether that's comparing it against BTC or going further down, comparing it to Solana or XRP, it has been underperforming against those. However, with Vitalik providing a clearer roadmap last week and ironing out some concerns with the successful launch of Pectra upgrade on the mainnet this week, Ethereum proved just how oversold it truly was when we compared the prices from Tuesday's lows to where we currently sit at the moment. Ethereum is now trading at $2,360 after briefly touching $2,500, which brought it up 42% from the lows on Tuesdays to the high of day today. Yeah, a really incredible push for Ethereum there.
What's behind this? Is it something to do with the Pectra update? Is it related to the Pectra update? Like, what's going on?
I personally believe it's down to sentiment of the chain. Like we mentioned, obviously, there was so much uncertainty as to what Ethereum was going to provide as a service going forward. Once that was cleared up, and then we had the Pectra upgrade that went absolutely smoothly on the mainnet, which is a really difficult task, and historically always causes some issues. There hasn't really been much pushback from that.
I did see a headline or some people getting a bit shirty about apparently it's made some again, I'm asking, this is a genuine question to you. I did see some people moaning that the Pectra upgrade made Ethereum wallets slightly worse on the security front. Is that true, or is that people like just fear mongering?
That's actually not a headline I've seen at the moment, so I'd be interested to do a little bit of research on that. Look at that.
Yeah, no, well, again, I saw someone tweeting about it, said there's a load of people moaning up because apparently something to do with, again, I'm not going to pretend to understand what I was reading, but something to do with the upgrade made some Ethereum wallets slightly less secure. That's what I read anyway.
Interesting. I'll dive into the technicals on that, and hopefully for Monday space, bring in and see if we can get to the bottom of that, because that would be not so good. But it doesn't see overall. It does seem like the Petra upgrade has been quite successful within its launch. We did see obviously spikes in Gwei, which is the gas fees, but that was due to an airdrop that was quite large on one of the layer twos, driving up costs of Ethereum and gas. But they have since come down. So moving on to down the market cap list in no particular order. Again, just especially 48 hours ago from our last crypto blast, prices are up quite significantly. Solana is now trading at $172, XRP at $2.40, and BNB is currently trading at $637. It was quite interesting. I think it was Wednesday we reported that Litecoin, which was LTC, this is before the major moves from the rest of the altcoin market, was up over 11% in the last 24 hours. And I think we made a joke where it would be funny if we just had a rehash of 2013 or a few years ago, where Litecoin, Ethereum, BTC were all the top movers and started all the kicking off the rest of the altcoins moving. And not unfortunately, but that's essentially what happened. Litecoin moved first, so I got a bit of a kick out of that.
Cam considers Litecoin improving unfortunate.
Yeah, I mean, come on,
sorry to all the Litecoin bulls out there.
You've been around long enough.
Yeah, right. Finally.
But yeah, it's catching a bid. All the Litecoin maxis came out of the woodwork. They're on the timelines. I quite enjoyed it because it gave me reminiscence from at least going back 6 years or so, when they were everywhere. I'm quite impressed. Now, something that maybe we'll see a change today. We've just covered that Ethereum is up over 42%, well, around 42% from Tuesday's lows to where we currently sit. However, the ETF flows, the spot ETF flows for yesterday, actually saw $16.1 million leave the spot ETF products. So that was quite amusing, because you're going to have probably quite a few people, kind of reminiscing, probably gripping a beer a bit too tightly today after missing out on massive gains. Just had to held overnight. But if they were selling on a net basis to just get out of position, this thing's not moving, that sentiment, you can understand it. It's not moved in such a long time. All of a sudden, they've got a bit of a clearer roadmap. Everybody's kind of knows what is happening, but the price didn't show that over the weekend. It really took till end of play on Tuesday for it to start moving to the upside. It's not a surprise that people will probably just want to take some profits, get out of positions, and all sorts. You never know when you're reading these flows. You never know the intent behind it. You don't know their entry prices. You don't know, are they selling for a profit? Are they selling for a loss? So it's cool to cover, and it can give you a little bit of a picture, but it's not the full pie, as it were. Just a tiny little slice of market dynamics. So moving on to news that's happened over the last, I'm going to say 48 hours, there's been quite a bit. The first quick news story: Coinbase strikes a multi-billion-dollar deal for major crypto options platform. Coinbase Global, important to note there between the difference of the companies, Coinbase Global was agreed to acquire Durbit, the world's biggest trading platform for Bitcoin and Ether options, for roughly $2.9 billion, executives told the Wall Street Journal. It came out of the Wall Street Journal. They've not had a great reputation recently, but Coinbase didn't come out and deny
who hasn't had a great reputation, sorry?
Wall Street Journal.
Oh, okay.
So that story looks to be true, and be interesting to see how that goes through. One of the biggest stories of the day yesterday, the Genesis Act, so a bill to regulate stablecoins like those pegged to the US dollar and gold, failed in the Senate on May 8th with a 48 to 49 vote. That's super slim margins there, but missing the 60 votes that were needed to advance due to Democratic pullback and opposition from Senate Josh Hawley and Rand Paul. So these stable coins are critical for crypto transactions, but lacked federal oversight, as we've covered over the last few weeks, raising concerns about consumer protection and illicit finance, as noted by Senator Elizabeth Warren's critique of potential conflicts with Trump's crypto ventures. And we're going to touch on another story in a few minutes' time related to Trump's crypto ventures and their potential conflicts. The bill's failure delays a federal framework, leaving stablecoins under fragmented state regulations, which Treasury Secretary Scott Bessent warned could drive innovation offshore, impacting US financial leadership in a global digital asset market projected to grow over $1 trillion by 2030. And no doubt the US are going to want to take a bigger slice of that pie as possible. So is this a good thing? Is this a bad thing? Probably if you're listening in the audience, you're kind of wanting to know just the key ingredients there. We mentioned, if you were listening just at the beginning of this week, the Genesis Act technically would have made interacting with the company Tether illegal. And recently we've seen quite a few developments with Tether, integrating with different financial ecosystems within the US. So it was really difficult to see the Genesis Act pass, specifically because there were multiple billions of dollars that wouldn't have been able to flow into the US had it have passed in its current state. So it's not a surprise that it didn't get through. I am surprised at how close the vote was, though. So moving on to another story, which again, another regulatory story, clearing up some framework. The US Office of Comptroller of Currency, I'm going to just refer to them as the OCC, where acting comptroller Rodney Hood confirms that national banks and federal savings associations can engage in cryptocurrency activities, including custody, services for digital assets, marking a significant shift in US financial regulations toward integrating crypto into traditional banking.
They're going legitimate.
You're legitimate, yeah. And so this policy change came into effect the 7th of May, so just a couple of days ago. It allows banks to buy, sell, and securely store cryptocurrencies, and on Keely here, on behalf of customers, reflecting the broader acceptance of digital assets within the US banking system, which had previously required regulatory approval for activities under the Biden administration. So going on a video there posted to X by the official OCC account yesterday, putting it in very, very clear words that banks can indeed hold and transact on behalf of customers in the digital asset world. So given the full go ahead there.
That's it sounds like a small thing, but it's my non-crypto brain, that seems like quite a significant move. Again, like joking aside, when I kind of said, oh, they've gone legitimate, it's the truth, right? And it's more of these little things we're starting to see chipping in, and more of these little kind of changes to the way it's being perceived, or crypto is being perceived. It's what you need for full mass adoption, right?
Well, exactly. If you in theory now you'd be able to walk into a bank and say, hey, I'd like to buy X amount of Bitcoin, and they go, yeah, sure, no problem. We'll buy the transaction, we'll store it. You don't have to do anything, but you know that you now own.
Yeah, and I wonder if that also opens the door to, like, say you have got a savings account and you decide to go in the bank and say, well, I want to make a withdrawal, and it's like, well, do you want that in dollars or in Bitcoin?
I would imagine they cap it at a certain percentage.
Also, I'd love to see their spreads, because if you go and I'll tell you what it's going to be like. It's going to be like when you're trying to change up your currency in the airport and you get your eyes ripped out on the rate.
Yeah. Oh man. Yeah, that's good. Yeah. I think that's exactly how that's going to happen. The race for the lowest spreads there.
Yeah, no, exactly that. It's like, hell, yeah, I bought I converted 20,000 of $20,000 in my savings account into Bitcoin. Oh, what rate did you get? Oh, I got 52,000 to the dollar. Well, hang on, it's trading 104.
Oh man, yeah, you can imagine it's going to be like that. You could potentially start to see people taking their monies and swapping banks based on digital asset policies.
Why not?
Yeah. So hopefully a little bit more competition in that space to reduce that. We'll move on to another story again, another regulatory story. Not quite in yet, but we'll cover it. Republican Richie Torres introduced the Stop Presidential Profiting from Digital Assets Act on May 8th, aiming to ban federal officials, including the president, vice president, Congress members, along with their immediate families, from profiting off of meme coins and stable coins that use their likeness, addressing ethical concerns in the crypto market. The bill responds to growing tensions over political figures like Donald Trump and those involvement in crypto ventures such as the Trump meme coin has sparked Democratic criticism for potential conflicts of interest, especially amid partisan efforts to regulate digital assets. Not very sly with that act, trying to push through there. Very, very cleanly calling out the president and his meme coin, and not only meme coin but the World Liberty Finance and their stable coin. And basically said we want to make
this.
It's
going to take 10 minutes listing off all the weird crypto stuff that he's up to.
Yeah, literally. So yeah, can we expect that to be passed in the next 4 years? Probably not, but that's just an assumption. I'm gonna put my hand out on a limb here and say probably won't see this pass, only in the next 4 years. Anyway, moving on. This is taken from PIQ. It's a really good platform if you've not gone to it already to get your news. Well, this one actually is one of their comprehensive oversights and summaries. Going over to Coinbase's Q1 reports. So Q1 for Coinbase, profit drops as operating costs climb. The summary here is that Coinbase reported a decline in first quarter profit, with adjusted net income falling to $526 million as rising costs weigh on results. Earnings per share slid to $1.94, down from $2.53 in the same period last year, reflecting narrower margins despite continued crypto market activity. Some of the key takeaway points, obviously, we just covered that the Q1 adjusted net income was around $526 million, down from $697 million year over year. Rising operating costs pressured profitability despite steady platform use. Of course, in that same time period, going away from the review here, we saw the base chain gain significant momentum, which obviously operates under the Coinbase structure. The crypto exchange remains sensitive to market cycles and trading activity. Now, this is the key part where investors will watch for cost management strategies in upcoming quarters. So it's quite an interesting take there from Coinbase. Surprised to see that their year-on-year profit dropped, but of course, addressing as to why that happened. We also saw earnings report from Marathon Digital Holdings, the Bitcoin mining company. I'm just looking at the slide deck here, and some of the key points to note is that their energized hash rate was up 95% year on year to around 54.3 EHS, which is their energized hash rate. So if we look over to BTC production, the amount of Bitcoin that they're able to mine, that's down 19% year on year. Now, why would this be? If they've managed to increase their energized hash rate up 95%, well, this is primarily due to the Bitcoin halving. Of course, their Bitcoin production would have been slashed by 50%. So the fact that it's only down 19% really, goes to show that Marathon Digital had a hold of their mining strategy pre-halving, going into post-halving. They really were quite methodical with their execution of that, and it's very impressive to only be down 19% when your production has been slashed by 50%. The revenue increase
to coin one of, I can't remember if it's Bezant or Navarro or whatever, when they were talking about the GDP print, it's the best negative number you'll ever see.
That's exactly it. That is exactly it. Revenue increased by 30% year on year to around $214 million. Their BTC holdings increased 174% to $47,531. If we do the quick numbers there, that means their liquidity included, well, for their BTC holdings exceeds $4 billion, around $4.7 billion at the moment. They're also staking, they're also lending, and have collateralized loans as well, so that will be included in their liquidity numbers. Their BTC yield per share, they're jumping on the BTC yield per share as well, is 3.5%. So I believe that's going to be it from me today with the Crypto Blast this week.
Awesome. Well, Cam, thank you so much as always. Listeners, thank you so much, especially all of you, well, basically all of you that listen to this on the playback. I know I keep saying it, but I really do need to pull my finger out this weekend. Hopefully, now we've got our new product being rolled out, I can get some time and put these all onto Spotify, etc. But thank you so much, listeners. Thank you as always. Whatever you're up to, whatever you're doing, stay safe, keep it tight. We'll see you on Monday. Much love.